Hello and welcome to Bradstreet CPAs video tax tip of the week. My name is Lance Bradstreet and today is February 15th, 2012. And today we're talking about on the blog how to save for small business owners, how to save on their Ohio Bureau of Workers' Compensation bills. And every state's a little bit different with their workers' compensation, and Ohio falls into that category as well. And on the blog, we're talking about some different ways, including getting your business into a group and making sure you're taking advantage of a group rating on the workers' compensation. So if you want to read more about that, our blog is at bradstreetcpas.com/blog. But what I wanted to touch on today on the video tax tip of the week is something that is becoming more and more prevalent as the financial crisis begins to work its way through the economy. And that is the cancellation of debt, and specifically its taxability. And been seeing this a lot, been doing a lot of research on it lately, and I think that people are sometimes being caught off guard by the fact that yes, canceled debt is taxable, and it's taxable in the year that it's canceled. So I know that sometimes these things kind of linger on and they can go on for a while, and some situations might be where you started the process maybe even as far back as 2009, 2010 and are finally getting things cleared up in 2011. Well, they are taxable in 2011, and if that's a situation you're finding yourself in, if you haven't already, you probably will be receiving some forms related to that. And the biggest form that's reported on is 1099-C. And back to kind of our prior discussions on 1099s, you're getting a copy of that 1099 from the institution that canceled the debt, and so is the IRS. And the IRS is going to be making sure that, because they have a copy of it, that it has been reported on your tax return or has been handled otherwise. And that's kind of what I want to get into a little bit today, is the otherwise. And some of these situations do become pretty complex, and I think some of the scenarios involved are a little bit too lengthy for a video conversation. But where I wanted to direct everyone's attention to is, and I'm going to read this because it's a little bit lengthy, I want to make sure I get it right, is the Mortgage Forgiveness Debt Relief Act of 2007. And if you go on to irs.gov and search that specifically, they have some really fantastic information that goes through different scenarios that might be able to help some taxpayers out there who've received these 1099-Cs. And when we're talking about the cancellation of debt, specifically some of the kinds of debt that can be involved in that are debt related to credit cards, and credit card debt wouldn't necessarily fall into this Debt Forgiveness Act of 2007. But what can and often does is the debt cancellation related to foreclosure, or something else that I think throws a lot of people off that it becomes a taxable transaction, is the short sale of a personal residence. And yes, the debt cancellation related to a short sale can be taxable unless, again, kind of dealt with otherwise. And I would say if you find yourself in a situation where you've got one of these 1099-Cs and it's related to a short sale and it's kind of thrown you off and you're not really sure what to do about it, the first stop definitely is your tax professional. Hopefully they're going to know all about this and all the right questions to ask and all the right ways to report it on the tax return. Now, if you're in a situation where you'd like to do a little bit of research before you contact a tax professional, again, I'd go to irs.gov and search out, again, I'm going to read this because I want to make sure I get it right. Search out specifically the Mortgage Forgiveness Debt Relief of 2007, Mortgage Debt Relief Act of 2007. I think it's going to take you through. There's some great instructions, some great articles they have on there that really spell out specific scenarios that will be able to walk you through just exactly how to handle that 1099-C. And in some cases, I don't want to give anyone false hope, but you might even find that if you fall into a certain year and a certain scenario, it might not even become taxable, which is great news for everybody. So that's kind of all I had today on the video. If you have any questions or anything like that, love to hear from you in the comments section. Or if it's something that you don't want to address in a public forum, my email address, as always, is lanceb@bradstreetcpas.com. Everybody have a great one. Thank you. Bye.